Hi, I'm Tim Harrison. I'm the Managing Director of Ionic Rare Earths. We're an Australian-listed company progressing magnet and heavy rare earth supply chains. We're pushing ahead on our magnet recycling business, Ionic Technologies. We've announced our feasibility study on a commercial plant in Belfast today. And it's great to be back here, Matt.
Tim, good to see you, sir. You put out the feasibility study numbers today in a press release. I have to say I was pleasantly surprised at the scale of what you put together. I don't know why, but I was expecting it to be smaller. Do you want to tell people about the numbers and we'll pick it up from there?
Yeah, look, so we've been working on this feasibility study for nearly 12 months. And with the support of the UK government, we've been working with partners, WSP and the British Geological Survey, on defining a commercial magnet recycling facility in the UK that can turn end-of-life magnets, permanent magnets, neodymium-ion boron magnets, recycling that material, but also waste products in the production of magnets, extracting the rare earths out, separating them into the high-value, high-purity magnet rare earths, and making a product, a strategic raw material that's going to be certainly an increasing demand going forward. So 1,200 tonne per annum plant in Belfast, producing 400 tonnes of separated magnet rare earth oxides. The split, about 350 tonnes a year of light magnet rare earths, so NdPr, which I think a lot of investors are familiar with. But the differentiator is the heavy rare earths, so about 37 tonnes per annum of dysprosium oxide and about 13 tonnes per annum of terbium oxide. Capital development, about 109 million US dollars, about 85 million sterling. NPV over 500 million, post-tax IRR about 44%. Over a 20-year life, it'll generate about 2.1 US dollars in 2.1 billion US dollars in revenue, and about 1.8 billion in EBITDA. So, a very positive study, and I think paves the way now for us to push forward with the government there on plans for commercialisation in Belfast.
Okay, 2.1 billion US dollars over 20 years. I know you've had to frame it in the same way that I guess natural resource investors would understand in terms of life of mine equivalent here. But this is recycling. There is a kind of end point, really, is there?
I would say, Matt, that it probably increases with time. So there is no constraint.
Right.
On your life of this asset, and if anything, it probably increases production as we go along. So, yeah, I think we've got a case that certainly helps us now engage with government, engage with strategic investors, engage in the financing, but importantly, engage with our partners in the supply chain to give them confidence around the economics of what we offer and what we can do in building capability. Separated magnet rare earth capability for the UK and Europe, and the potential to pick this up and replicate it in other target markets like the US and other parts of Asia, Brazil. We can replicate this pretty much anywhere.
So a lot of cash. I think the IRR is somewhere 43-44% from memory. It's making money. The capex seems low. I mean, but still, let's not kind of skip over it. Say 109. So let's say 110. Million. What was it? Are we doing USD on this or USD? Okay, so it's not a chunk of change compared to some of these kind of big mining projects where the capex numbers are significantly bigger. So I don't think it's going to frighten anyone. But nevertheless, you've got to have a view about how you get this finance. You've mentioned the British government's involvement here. I suspect there'll be other ways to finance this. How are you looking at it?
Yeah, so look, I mean, we've been engaging with the UK government now for some time. So we'll now, on the back of having this document, engaging with the Advanced Propulsion Centre, which is, a vehicle that's been set up in the UK to help prioritise projects and finance projects as part of the security of about 1 million jobs in the UK in the auto sector. So UK currently is, a lot of employment in internal combustion engines. UK government is looking at how it can facilitate those jobs moving into e-drives, so electric motors. What do electric motors need? Magnets. And so the UK government has been very targeted in looking at rare earths and looking at how it can help facilitate the development of a domestic magnet rare earth supply chain. Ourselves, as a recycler, producing high purity separated magnet rare earth oxides, feels one important piece of that. There's metal making in the UK. We've got a partnership with Less Common Metals. We work with them on a number of different programs at the moment. And then potentially there's a magnet manufacturer that comes into the UK as well at some point. And so we do see a combination of companies coming together to provide that sovereign capability in the UK to support those jobs. And so we'll be working with the government on a potential grant, which would cornerstone the investment decision, along with strategic partners and banks that we're dealing with. You know, we are part of the energy transition. We are part of producing strategic raw materials for the UK, and we are part of that regional growth effort. So we're in scope for a number of things that the UK government has allocated money for, and we're in discussions on that as well.
Right, and obviously people are going to want to buy this product at the end of the day. What they're going to need to believe that you're able to kind of get the feed to put through your process and spit out, the separated metals the other side. So where are you with that? And what does the feasibility study use as the premise of what the volume of that feed will be?
So we started the feasibility study initially with a plant that was going to be about half that size. So we were looking at about 600 tonnes of throughput to produce 200 tonnes of oxide. As we worked through that fact-finding mission to understand what does the flow of material look like within the UK, we quickly identified that it's going to be too small pretty quickly. So we basically doubled capacity. It's a modular design. We can tack on additional units. We can be responsive to the flow of magnets that is available in the UK. But we're not completely dependent on end-of-life magnets. We've got a process that can take the swarf and offcuts from both metal and magnet manufacturing. And it's important to probably understand that if you assume 100 units of oxides goes in to make the metal, the alloy, and the magnets, along that chain, there are waste materials that are generated because not all magnets are blocked. You've got arc magnets, curved magnets, there's shavings, there's offcuts, there's breakage. That material is perfect to come back into our flow sheet. And so we've designed a flow sheet. We're working with partners now across the metal, alloy, and magnet space to provide a mechanism for that material to be recycled back into their supply chain, external to what previously has happened through China. And so we are providing that optionality. So if we look at where we're sourcing material, we're looking at UK being an early adopter of offshore wind. That fleet of or those units are approaching end of life, some of that first generation. So we do anticipate significant numbers of end of life decommissioned wind turbines. We know that there's about 3,000 wind turbines on the island of Ireland as well. And so appreciating not all of those wind turbines are direct drive and use permanent magnets, but we've done the work with some consultants to understand, well, what are the units, what are the models, who's operating those? So working with wind farm operators, working to source that material back into the supply chain, monetize a product or a material that they'll be producing through decommissioning and turning that back into a product that can be used to make the magnets for the next generation of wind turbine.
Right. Well, talk to me about how that transaction works, because there's a point at which you can say, well, you're decommissioning these wind turbines. You've got to do something with it, right? You've got to recycle that. You've got to find a solution. But we can take that off of your hands and make that. It's no longer your problem. Don't worry about it. Which case you're picking up the materials needed to feed into your process, and you can capture a lot of the margin there. Versus a point in the future where if you get competition, if there are other recycling solutions here, there's a bit more competition for that feed, and maybe you capture a smaller amount of that margin. And how have you kind of factored that in your workings out, as it were, over time, to see how long these contracts can be, how long this fee can keep coming through, and how much margin you can capture in that
So I
deal?
think this is where partnerships across the supply chain are incredibly important, right? So strong relationships across metal, alloy, and magnet manufacturing are going to be imperative. And so we've been doing a lot of work in that space. As we look upstream to the decommissioning, one of the recent grants that we've been awarded in the UK is looking at technology that can make the decommissioning of offshore wind turbines or large arrays of magnets safer and more efficient. And so we're looking at how we can partner and take technology up the decommissioning process. So we're looking at it from both angles. And I think that a lot of this is going to be based upon relationships. It's going to be built upon the ability to take the material, provide clarity around the potential to monetize some of this material, because we are aware that in some instances, some of these magnets have been scrapped as iron, simply because it's a lack of understanding on the opportunity. And we are exploring these opportunities now with a number of groups, and hopefully we're in a position soon to start talking publicly about some of those relationships. That's just in the wind space. On the auto space, again, relationships with ultimately customers, providing them with recycled materials, which they're going to require as part of their requirement to meet the guidelines for the European Critical Raw Material Act by the end of this decade. Means that we'll also have an ability to take the breakage that comes from their production lines and take that back full circle, back to provide them with recycled materials and closing the loop from a circular economy for those partners.
Right. And so will each sort of customer or each agreement have its own, pardon me, have its own kind of flow sheet, as it were? Because obviously, I've been to your plant. We looked at it. It works. The technology works. We're not going to have a discussion today about whether it works or not. It's more about the kind of commercial imperative for you, which is trying to get those agreements, contracts, and partnerships in place, and work out what each of those needs. It'll be, I guess, mostly the same, but they are going to have to. You're going to have to work out what both parties want from it, right?
Yeah, look, I mean, it's there's a number of different relationships, and beyond this simple transaction, we buy, we convert, there's also tolling arrangements. There's a number of ways in which we can work with partners to not only fill what we propose to build in Belfast, but as we look to actually pick up and replicate this closer to our partners' base of operation. And in doing that, we'll drive actually further value creation by dropping our OPEX even further. So there are a number of ways in which we've got a feasibility study here, which provides us with a template to pick up and understand, if we work with partner A, what's that going to look like?
Right. So, but just be clear about what the potential is there. The modular means that you can pick up this design and plonk it anywhere in the world, right? That's one.
That's it.
And it could be next door to an automotive manufacturer, which, let's say, I don't know, 5%, 10% of batteries attempted to be made, are bad, and that's the kind of feed through to you. Plus, every 7 to 10 years, batteries come back in and they get recycled by you. So that's a nice standalone unit. I assume that's on a licensing basis.
So look, I think we're looking more at the joint venture arrangement.
Okay, yeah. Interesting.
But again, everything is based upon the relationship and the partnership and commercial terms. So I think what we intend to build in Belfast is a centre where not only we can demonstrate the technology, but also continue to enhance. I mean, we're in the process now of doing more R&D and support and programs at Queen's University. So we're sponsoring more PhDs. We're continuing to push ahead on the technology, continuing to make innovations. I think we mentioned when you came up through Belfast in July, we filed another 3 patents. We're continuing to innovate because we're constantly seeing better ways to do things. And we anticipate that once we built Belfast and once we roll things out globally, we'll be able to demonstrate technology in Belfast and quickly roll that out to our partners.
Right. And what's the relationship between government and, private or other public businesses, which have their own sort of imperatives? You could argue that government has a political imperative, which is right employment in specific regions, and the ability to sort of tick a box which says, "Hey, look at us, we're green, we're recycling," right? Whereas if it's a large car manufacturer, they're going to have a bunch of very strong commercial reasons why they might want to do this with you. Do those two work together, or are you dealing with them separately? I mean, how do you imagine that working?
Look, I think each joint venture or each initiative is going to have its own value drivers. And in the instance where, for example, we're working with an OEM on standalone recycling, the likelihood is that we're going to be dealing with a pretty consistent feed. Whereas when we're looking at a facility like Belfast, which is providing much more flexibility to a wider market, we need to have, and potential applications, government is an enabler, because government's looking for strategic raw material supply that's imperative for the military and defence complex, right? And so there is a sovereign capability that the government's also looking to support. So again, each opportunity will have its own drivers. If we pick this up and put it, for example, in the US, again, there'll be other drivers there that can substantially change the economics.
Okay, so you've demonstrated the ability to solve the problem technically. So it's a problem which needed solving. It's a problem which is in demand. So I think it's an absolute congrats on that, and obviously showing the scale of the potential here in the sense of 12 tons per day is not too shabby. What are the next steps for you? Do you have to build in Belfast? Is that the expectation from the UK government, or is there other places in the UK available to you? How quickly can you move through the phases now?
Yeah, look, I mean, there are some additional costs that we'll be wearing in Belfast, and we've sort of identified that, and that's a discussion that we have with government. But we think it makes sense to build it in Belfast, given the port infrastructure there, and being one of the two harbours or two ports in the UK that are prioritising or have been allocated and focusing on the rollout of offshore wind and decommissioning. So we think it makes sense. It's close to the IP. We've got a lot of capability in the area. There is a green energy offshore wind hub that's developing in that area as well. So, there's a number of reasons why Belfast makes sense. The development of that will be dependent on how we engage with government, the support we get. Is it first? Well, it's the most advanced at the moment, but it's not guaranteed to be the first, because we are seeing opportunities to replicate in other markets that are looking for exactly the products we can produce. And now with a feasibility study, we're armed with the information to really zero in on those potential joint ventures and locations where we can drive the OPEX considerably lower. We can probably leverage off existing infrastructure. And so that is really now the next step for us, is to understand, well, okay, we've got a feasibility study for Belfast. We know that there's appetite in other jurisdictions. Which one moves first? That's, I suppose, a question for Western governments.
Okay. And so just before I leave kind of funding alone, is there any expectation in the feasibility study, which I've not had time to kind of have a look at, that there will be a need for government grants or funding or tax incentives? Is this just the kind of the clean version without any of that?
Yeah, there is no allocation. There's no assumed support from government. This is 100% financed, and certainly any support we get from government would certainly enhance the economics of the project even further.
Interesting. And I guess we'll have to see what shape that potential money could take, and the cost of that money, because they say that will dramatically improve any IRRs on this one as well. And on the back of the government side of things, it doesn't sound like there's a kind of specific deadline, timeline in place for them. They don't have to deliver to any kind of promises that they've made to the electorate. And, how has this new government changed things for you?
Yeah, look, I mean, I was in the UK about a month ago, meeting with Sarah Jones, who's the Minister for Energy Security and Net Zero. She also covers the Department of Business and Trade portfolio. So certainly our offering sits within scope for both of their portfolios. It is automotive. It is military and defence. So there are certainly aspects of what we provide as a company, a technology, a recycler, producing strategic raw materials into that UK market. Timeline-wise, we've been in discussion for some time. Hopefully it's not very far away at all. But now with the feasibility study completed, we are armed with the information to step up the discussions with government now around what that potential grant would look like, what quantum would be, and that will be a mechanism then for us to go through, and then, the first step on commercialization in the UK.
Right, and just so I understand the process more clearly, because this is recycling. This is not mining. So a lot of people are used to investing in mining, and some of your shareholders, will have invested on the basis of you're looking at a big mining project. This is different. The next steps for you, the feasibility. Do we need a definitive feasibility study, or can we move through to some kind of FEED process or FID process shortly?
Yeah, so that's part of the next step is to move now into FEED. So as we completed the feasibility study, we've identified a number of opportunities that have the potential to reduce the CapEx and potentially the OpEx. And so we'll work through that through the FEED process, which will happen in parallel to the financing and FID. And hopefully with, positive support from government by way of a substantial commitment on capital through a grant, plus also the financing activities, engaging with, government-backed lenders in the UK that have a clear mandate around energy transition and regional growth, plus strategic investors. We think that at 85 million sterling or 109 million US, we have a project that certainly meets a number of criterion for the UK government on strategic raw material, sovereign capability. The fact that it's inside the UK jurisdiction, I think, is a massive advantage for us. There isn't any radionuclide issues. There's no mine permitting issues. The capital requirement is a fraction of what's required, to go and build primary supply. And we're able to produce a product that can feed into UK advanced manufacturing. So I think we tick so many boxes. The capital is the right quantum. We'll continue to try and work that down. But I think we're as a company that started out in the mining space, we've looked at the rare earth supply chain. We think that the recycling is the piece that moves first. It's the part that starts to, prime the pump on the supply chain. It gets material moving. And that's going to be absolutely critical for Western supply chains to be built.
For sure. And I think, well, first of all, I need to say to anyone listening to this or watching this, go read the press release, because there's a huge amount of detail in there, relevant detail in there around the commerciality of this. So do that. And I think one of the pieces that I looked at was the sensitivity analysis, because there's a couple of things going on here. One, which is the kind of has been of recent times erratic nature of rare earth prices. Obviously, the heavies, slightly different from the lights, but nevertheless, it does sort of change the playing field somewhat for public companies. You guys are recycling, though. Do you think that the market's going to view that as a premium product in terms of green credentials and therefore better pricing, or will it just be you know, it's all one price, and that's what you got wherever you get it from. You take a view about the ethics of it.
Yeah, look, it's an interesting one. I saw some work that was done by McKinsey probably a couple of months ago that talked about premium and what customers are prepared to pay. And there is an appetite. Yeah, there is an appetite for some of this stuff. But I think as we talk with procurement departments and ultimately customers right now, they don't really want to talk about paying anymore. They want a product that is at China prices. And I think the reality is that it's probably not a premium associated with being green. It's probably a premium about being available and being secure. And I think that that's the product that we're delivering in the UK. It's a secure product that can go into advanced manufacturing. It can go into requirements in military and defence. And I think that is the differentiator for us.
So that's a really interesting one, because again, the nuance of that being is about certainty of supply, which may command a premium, rather than the green factor, which may command a premium. We'll have to see how that plays out when the market's, well, when the market gets going for you guys, and I'm intrigued by that sort of concept. Well, look, I think we should wrap it up there, Tim, because it's been that's been fascinating, and like I say, you surprised me to the upside on the size of the opportunity and the margins that you're looking at. Love to kind of get into the weeds with you a little bit more when I've had time to digest the feasibility study, but it feels close. Feels very close.
I think we're well on the way, Matt.